Okay, Chapter 9. So in Chapter 9, which is developing and qualifying prospects and accounts. So we'll discuss the importance of developing a prospect or an account, identifying and assessing important sources of prospect accounts, describe the criteria for qualifying prospects and accounts, explain common methods of collecting and organizing prospect and account information, and describing the steps in managing the prospect or the account list. So one of the things that it talks about in this chapter, and I think I mentioned it earlier on, is that you hear the word sales, but there's also something in the more business to business world which is called business development. They basically mean the same thing. Just one's a little bit of a more fancy term than sales. So when you're out looking for jobs and you've decided you wanted to get a sales job, sales tends to be business to consumer, and the business to business tends to use business development more. And I've seen it in the business world where it's used interchangeably. Some use it sales, some say business development, but just make sure that when you're doing searches on jobs, you're searching for both of them. So it really becomes about information. So when we're talking about developing and qualifying prospects, there's no point in going after somebody who has no intention of buying your product. So your sort of Q&A with them as you develop that relationship with them is to qualify if they are somebody who's going to buy your product. So you can either do that through normal data, where you go out and buy sources and lists that tell you, hey, this person is in a demographic group of this, they are in a sociographic group of this, they like to go to concerts, they have photography as a hobby, they've got 2.5 children, they are divorced, they like to go on vacations, they make about $100,000 or more. All of this data that you collect on somebody are helping you qualify consumer prospects. And you can also use that, I would argue, a little bit when it comes to business, although you're going to be looking at the company more in business to business than you'll look at the individuals within the company. But I would argue that if you're a smart salesperson, that you're also looking at the individual who is the buyer, because their psychographic information and their demographic information also influences their buying decisions on behalf of the company. So you're going to want to make sure that you look at that. So there's sources of prospects and accounts, referrals. You know, if somebody refers someone to you, there is on social media, prospecting on social media. So for example, you can go on LinkedIn and look for certain types of companies and call on those companies. I've literally driven around neighborhoods, especially industrial parks, looking for business names on the outside, or walking in and asking who the buyer is for that company. There's directories like Google, Yellow Pages. There are trade publications, so the American Marketing Association, but Strategic Industry Staffing also has a list of their members. Trade shows and special events, as mentioned, many of those associations will have trade shows and special events. And there's telemarketing. Telemarketing is those outbound cold calls. And I will tell you, I have my heart out for telemarketers. While they are annoying, and I have had people who do not listen to me when I say, well, thank you very much, I appreciate it, but I'm not interested. And they'll go too far, and I'll say, I thank you very much, but I've told you twice now, I'm now hanging up. And that's fair. But on the other human side of it, these are people that are trying to make a sale to make money for their families. So I would say be gentle on telemarketers. Their job is very difficult in making outbound calls, but there are also some that cross that ethical boundary of calling too much and too frequently and not listening when you say you want to get off the phone. And that's when you have permission not to be rude and inhumane to somebody, but to just be firm and say, I'm not interested, and hang up. But telemarketing is a way to be able to develop those calls and prospects. And there's a whole list of them that are out there where you can find people that might be interested in your product or services. And then you have, emails that you see sending out. Many people get emails that are junk emails. That's what junk emails are. They're unsolicited opportunities that people are trying to take to sell you on something. So again, consider all of those different sources, especially if you want to develop your own company. Those are different ways that you can go out and find prospects. And that is no different than when you are a job seeker and you're out trying to find a job. You're going to go out to, let's say, LinkedIn Jobs or Indeed or Career Builder and look for companies that have openings. That is no different than the same thing that you're doing here when you're out trying to prospect to sell a product or a service. Cold calling tends to be the hardest thing that I see that people have difficulty with. Picking up and calling somebody that you don't know. And I would just suggest that as you're reading through this, remember what I've always said, and hopefully this can help you, is that I look at it like being a detective. If you look at and approach a company and trying to figure out who it is, let's say I'm trying to get to somebody in HR, and I don't know who that person is because maybe they're not on LinkedIn. Or maybe you're looking in other places as well, and you find this person's name. If you're trying to get to that person, you might find that that person is not really who you need to talk to. So maybe it's the VP of HR. Most companies, a VP of HR might be the decision maker, but for some companies, they're not. It's the manager of HR who makes those decisions. So you really have to figure out who is the decision maker and who is the influencer. And if you look at it like a game, then cold calling is not that difficult. You know you're going to call into an operator, and they're called the gatekeeper. They're the ones who are going to help direct you to who you need to talk to. Then you might call into a department, and that department may, you ask, well, who is it that I can talk to about, let's say staffing services, or, who does your buying for your fleet vehicles? Whatever you're trying to sell, then you're going to figure out who in that department. Maybe you're calling into accounting because you're selling accounting services. Maybe you're calling into engineering because you're selling something that's engineering related. Maybe you're calling into the transportation department because you're selling something that's transportation related. Maybe you're selling IT services and you're trying to sell something to IT. But let's say you're trying to sell something to IT, but it's an HR software. Then you're going to want to talk to IT and HR. So that's how you get in when you're making a cold call. But that is another way. A cold call is another way of being able to find people that you can look at as prospects. So then once you've contacted these people, then you have to qualify them. And sometimes you're asking questions, and that's what's called sales intelligence. Asking questions like, so, when you buy, do you normally, what is the dollar amount that you spend on your fleet vehicles? And they may say, well, we spend $3 million a year. Well, to a small company, that's a huge win. I've got somebody who says, I can have a $3 million client. For these major corporations, I've literally worked for companies that say, don't even talk to me unless they buy 10 million or more. And that's typically what you see in a corporate sales. They're looking for those big volume customers. So you really have to qualify your customer, whether it's based on how much they spend a year, where they're located. Sometimes they may say, well, we're located in California. Okay, well, sorry, I'm a Michigan-based company. So, there's a lot of different things that you have to go through, and the textbook discusses a lot of them for being able to qualify and how and why that's important. And then there's managing the account and the prospect base. So you've got portfolio models where, let's say, for example, when I worked, and I give you an example of Keely because, again, it's my big corporate sales, but I've worked pretty much in almost every industry that's out there. But I had a book of 11 customers that totaled 50 million in sales. And I had to manage 11 different customers. That's a portfolio of customers that I have to manage. And so those are, when you're looking at the portfolio model, you see that in the banking and finance industry. They may, investment bankers may have a portfolio of clients whom they manage their investments. So that would be an example. You've got the sales process model. Make sure that you understand that. Pipeline management. Again, once you've got people in the pipeline, the sales pipeline, you are moving them along a process. That process is from the initial qualifying all the way to the close. So that's presentations, contract negotiations, additional sales meetings, whatever it takes to make that sale. You go from basically 0, where you haven't even called on them at all, to 100%, which is the close ratio. So that's managing a pipeline along that process to closing a sale. And then your leadership will be looking at that because that's the pipeline that they will use to forecast future sales. by looking and saying, well, hey, we've got 200 million in the pipeline. We expect that we'll probably close 10% of those, and we can expect revenue next year of X percent. Those pipelines become very important for you managing the sales process and moving a client along that sales pipeline, but also for your company being able to prospect as well. So as always, remember to do all the chapter learning activities at the end so that you get practical application of what you just learned.